right. Welcome everyone to another episode of Daily Rates Live with Mortgage Calculator. My name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a lender that offers all these standard types of loans, which we'll go over here in a moment. But we always love to go into a deep dive on a particular type of loan. And today we definitely have a unique loan type, our portfolio or blanket loans, which is one loan across multiple properties, typically for investors for investment properties. That's not a standard. It is a commercial loan for investment properties. So have a couple of specific examples pulled up of the rates today, which are pretty amazing. And give it a moment here to go live on all the different platforms, and we'll get into the live rates for today. So let me go ahead and get started. So welcome everyone. My name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a lender that offers all these standard loan programs in our 35 licensed states. So please one of our licensed loan officers if you'd like a full breakdown of anything you see today. But today we will go into a deep dive topic into our specialties. We love to specialize in QM and investor loans and some unique loan products. So we will go over a specific example today of our portfolio or blanket loans, which again is multiple properties under one loan for investors. This is a commercial type of product. So let me go ahead and switch my screen and we'll get started for today. So we always want to pull up the general rates. So the 10-year treasury is one of the best indicators for all the different RAMs. So this is one of the easiest things to look at in order to get a general sense of where rates are across all the different loan programs. There are other metrics as well, but this in general, rates are dropping for all the different options here over the last 5 days, which is good news for everybody out there shopping. And we always want to put perspective here. So if we pull it out to 1 year, we see we are still pretty much at 1 year lows, which again is great news and why the rates have been getting better continuously the last few months here. So great news for everybody out there shopping. There's a lot of up and down throughout the week with the different news cycles and items, but just know that we are at 1 year lows, which is great for everybody. And now let's get into our specific live rate examples. So we always want to pull up our standard programs, and then we'll get into that deep dive on our portfolios here in a second. So for all our standard programs, we pull up a scenario that allows us to compare all the different loan options we offer on this page. So we have a standard single family home, 500,000 purchase price, 3,000 loan amount. That corresponds to 60% loan to value. We use a 760 estimated FICO credit score, estimated 40% debt to income ratio for these loans that require debt to income ratio. So with those settings, we can look at all the different programs here and get into a deep dive if you'd like a full example on how these work. Now, our primary, typically the option you think of when you think of a mortgage, Fannie Mae, Freddie Mac. Rates coming in today at 5.875, final APR 6.135 with all the fees included. And we'll typically compare for most borrowers to an FHA example. FHA allows more leniency on credit issues and events and a higher overall debt to income ratio, but does require upfront and yearly mortgage insurance. So FHA comes in today, 5.25, final APR 6.148. So notice it's a touch higher APR than the conventional option, but obviously has a little more leniency there. And for our eligible veterans and active service members and surviving spouses, we do have our VA loan programs, definitely amazing options. Rates today coming in at 5.37 and the final APR with all the fees included, 5.627. So notice much less fees over here for our eligible veterans and service members. When you compare that to FHA. So even though the rate looks a touch higher, overall the cost is lower. So definitely, if you are eligible, look at those VA loan programs. And another government option here, USDA, only for USDA eligible areas. That's typically the rural areas of the country. And if our customer, our borrower is eligible and the property is eligible, these are great options to look at. Today rates come in at 125, final APR 5.802 with all the fees included. So we'll typically compare that to an FHA option or a conventional option for our borrower in those areas. And typically USDA might be a little bit better. So definitely look at USDA if you are shopping in those areas. And this is where we love to specialize when we go into our specialty loans. First up for our specialty loans for alt doc. So that would be bank statements, 1099s, P&L statements, all the different alternative documentation we can use for a primary home here. Rates today come in at 5.875, final APR 6.145. So we're typically going to compare that to conventional. And for our borrowers that are self-employed and need to use all docs, You see here it's almost identical price to conventional, which is amazing when our non-QM prices are nearly identical there. And we can use those same programs for investment properties. So to use bank statements, 1099s, P&Ls, etc. for an investment property, rates today come in at 6%, final APR 6.321. And we'll compare that here to our conventional option for an investment property. Rates today come in at 6% flat as well. Final APR 6.311, so just a touch cheaper to go conventional, but always amazing when our non-QM are nearly identical to conventional programs. And one of our favorite options, and we'll talk a little bit more about that today, DSCR stands for debt service coverage ratio, no income needed. We simply use the estimated rents for an investment property to determine a DSCR ratio. For these examples, we use a ratio over 1.00, meaning the estimated rents can cover the expenses. And for this option, we added a standard 3-year prepayment penalty, which is standard for these programs. These are typically commercial type of programs, so it does include a prepayment penalty. We have options for 5-year as well as 0, which we'll go over in a second as well. Rates today for the standard 3-year prepayment option come in as low as 5.999, final APR 6.307. So notice this is actually cheaper than conventional because we were able to add that 3-year prepay to make it a little sweeter. And we can even add a 5-year prepayment penalty to reduce the costs and rate a little. Rates as low as 5.875 when we add that 5-year option. And final APR 6.157. And quickly we'll go over the no penalty option. So some states don't allow a prepayment penalty. And some customers do not want one. No problem. We have that option. Rates is 6%. Final APR 6.321. So much higher than conventional when we need to go DSCR with no prepay. So all kinds of amazing options there. And if you scroll down throughout our live rates page, we offer all kinds of different loan programs. Today, we want to get into a specific example for our portfolio options. So that would be typically down here towards the bottom. We have portfolio or cross collateral, which is multiple properties under one loan. For this example, I actually pulled up something, one of the properties I own. So I own 3 houses right next to each other. This is a great example. It's very hard to find listings that are portfolio listings because it's obviously multiple listings. But if I wanted to refi these 3 that I own here, this would be a perfect example. They actually are connected, so a great example here. So we're going to look at these properties to do one loan across all 3 because it makes a lot of sense here. They're kind of in the same development. They're identical properties. I bought these from the developer. So it would make sense to use this product to either purchase or refinance these 3 together. So this is a great example to use here. And first up, we have our purchase example. So in this example, we took it to the maximum of 80% loan to value, so 20% down payment to purchase those 3 short-term rental income properties, 5-year prepayment penalty. So this is at the max leverage. And those 3 properties were valued at $560,000 each. So you'll notice this loan includes all 3. And we did add that 5-year prepayment penalty to get the best pricing options. You know, there are other options out there, but this is a great example to look at. So rates today come in as low as 6.731 with 2.75 discount points and costs. Obviously, we can go a little bit higher rates for lower discount point costs or a little bit lower rates, a little bit more as well. But this is where the suggested line point was there. And that includes 1.68 million purchase price for all 3 units here. Would require 20% down payment for $336,000. And we get that final portfolio loan of 1.344 million. And the monthly payment on that example at that rate would be $8,700, which would be nice to have one loan payment across all the properties and retain all of that additional cash flow from these rental properties in this scenario. So this is if we wanted to sell these properties at the market rate here. Notice I didn't put an actual address because it is 3 properties combined, but we went. Now, let's look at a refinance example. So a lot of investors are refinancing right now. And in this case, if I wanted to refinance these properties, I could take it to a max of 75% loan to value to get cash out of these properties using, again, short-term rents with the 5-year prepayment penalty. So in this example, the rates are just a touch higher, which is pretty amazing, 6.781 in this example. And we'll have the same value, but we can get up to a $1.26 million loan amount. So a little bit lower loan amount. And the monthly payment a little bit lower, obviously, lower loan amount, but the same basic discount points and rate choices here. And again, that's 3 properties combined for 75% loan to value, which is going to be our max on the portfolio option. So these are pretty straightforward because these are DSCR loan scenarios, pretty standard. This is typically considered a commercial loan, but in these examples, we have simplified it a little bit, and it is a simple DSCR loan, just like we consider for all of our single properties, but we're allowed to combine multiple properties for this specific example. So these are great options. If you have any questions on getting a full breakdown, if you have a portfolio you'd like a full quote, please get with one of our members or drop a comment here. We'd be happy to send you over a full estimate. And for anybody out there shopping, again, remember the rates are at just about 1 year lows. So good everybody out there. And thank you for joining us today. We'll be back later this week. Thanks, everybody.